All right, traders, it is time to prepare to go to war tomorrow to take money out of the stock market. If you are serious about making money, I strongly recommend you consider trading at my key levels. Do not blindly follow. Do not go in with a bias and blindly trade that bias. Let's get straight into the analysis. Within this video, the reason why I'm going to be interested in doing puts at $432.78 is because this is a key support level that cracked. Once this support level cracked, it never retested. It kept on dropping, it kept on forming lower highs, and then the SPY decided to bottom at the exact key level that I gave you to buy call options in my videos last week. If you would have bought calls at that key level, you would have made a lot of money. With that being said, I'm planning to buy put options and to go short at $432.78. Now, another thing to keep in mind as well is, another thing you can watch for is resistance at $432.40. The reason why is that's a strong bearish wick at 432.40 on the 30-minute chart. Now, in terms of the daily pattern that I'm seeing on the SPY, the daily pattern that I'm seeing on the SPY is, it is telling me that if the SPY has a nice spike up, it moves up, or if it has a gap up, it's going to be a great opportunity for a bull trap where the bulls get trapped and you're going to want to play put options at one of my key levels. So another key level is going to be the pre-market highs. If the SPY is having a move up in the pre-market and you see a very nice drop from a resistance level in the pre-market, that will be one of the levels where I'm interested in buying put options at. Now, that is based off the daily pattern that I will not be disclosing, and I will not be blindly trading a daily pattern that I'm seeing. I'll be looking for some sort of confirmation to actually trade at that level. Now, if I were just to blindly trade a level, it would be this one. I would just blindly go in at $432.80. I would consider that a great trade to just get in at that price. If you do not blindly go in at $432.78 and you wait for a confirmation, you will get a lower entry. If you get a lower entry, your stop loss is my entry. The choice is yours. Within Trader Society, I teach people what trades they should consider just going in at a key level and what trades they should consider using a confirmation. And I always tell people the 30-minute confirmation is your best confirmation if you're looking for that perfect timing, but it's not going to get you in at the best entry in certain situations. So with that being said, this is going to be another key level zone where I'm interested in buying put options and shorting the market. I will be keeping an eye on these two levels. I do not consider them to be the best. This is just something that I'm watching. The best levels that I consider is that 432.80. With that 432.78. With that being said, 433.96. This is key support. When the SPY cracked this support, it did spike back up a tiny bit and then it sold off and then it tried to form a lower high. So technically, it's not the strategy that I teach. It's just something I'm watching on. I don't value this to be anything special. This key level is a little different. You know, this was support right here for a minute at 434.88. The SPY cracked this support and then it spiked back up and then it formed a lower high. So in a sense, it's kind of weird. It's like it did retest the level, but if it didn't retest the level here, it formed lower highs. It's a little bit difficult in that sense looking at the 1-minute chart. But I will be keeping an eye on that 434.88 level for put options and to go short, right? In terms of the 30-minute chart and where those bearish wicks are as well, where it's going to try to have small drops first, it's going to be this level right here. Keep an eye towards that 434-ish level right here. This is the level that see how it's 435.10. So that level 434.88 and that lower 434 level that I just gave you, they're going to try to drop it along when it tries to retest this 435 resistance zone. Those are our levels. My favorite plan that I disclosed is going to be that 432.78. Now, based off the daily pattern that I'm seeing, if the SPY does create a major bull trap, it's going to be a very lucrative day trading opportunity for put options at our levels, not just scalping, but you can scalp with the trend and you can also leave some runners to ride if you want. Make sure you're setting your profit stops, especially if you're, day trading these levels. But with that being said, it is telling me that it's going to either close weak or have a bullish recovery. So I will only be interested, with that being said, in buying calls at extremely oversold key levels. These are my key levels where I'm planning to buy call options at. I have 3 key levels. Make sure you save and set price alerts at every single key level. We know a lot of you are lazy, and if you want to get rich, you can't be lazy. God hates the lazy. But with that being said, I will also be working on a price alert bot that is going to alert you within Trader Society when our key levels trigger, because there is also a lot of new key levels that come out that we post in Trader Society. But I understand people are too lazy to set the alerts for themselves. They want some sort of AI bot. So we're working on getting that done. But with that being said, these are our 3 key levels. 425.48, 425.48, 425.90. This zone, this is very strong key support. It's going to try to bounce here first. If SPY goes under 426, they're going to try to bring those 426 calls straight back into the money for a very nice scalp. Same thing if the SPY went to 433. They're going to try to bring those 433 puts straight back to in the money, right? So buying out of money, selling in the money. But the level was 432.78 for puts. Now, our next level for calls. So again, that was key support that hasn't been tested. That's why it's a key level. We're interested in buying calls. It's going to try to spike there first time it tests. Next level for calls is going to be right here. This is previous resistance that has not been tested. Look at this. This has not been tested. Right here at $422.81. 422.80 to 423. Previous resistance, once it broke out, it created a major bear trap. So when it goes back down to 423 and under, they're going to try to pump those 423 calls to straight back in the money. Such an amazing opportunity to day trade at. Same exact strategy that I told you to buy calls at 429.90. What were you sleeping? Gosh, guys, I'm giving you the best strategies. Previous resistance breaks out. It's supposed to react to support when it drops back down. This is a major bear trap level. $423 is going to be a game-changing level for calls. Our last level for calls is $420. You have a very strong bear trap and very strong support at 419.70. That's where we're interested in buying calls. Those are the best levels I can possibly give you before the market is open. Along with that analysis that I gave you, consider the pre-market highs. If it had a nice drop, that could be a new level for puts as well. That is the best setups at the best prices.